Hey everybody, this is RC Peck. So good to have you here. My weekly, what is it, a blog, a vlog, my weekly thoughts on the market. And I want to start today with this price chart. And it's a price chart of a ticker symbol MJ. It's the Alternative Harvest ETF. Basically, it's pot, marijuana. And I bring this up because there have been hundreds of thousands, if not millions, of newsletters sold just on the idea of you got to have the best pot stock newsletter. And the problem with entering into an agreement with someone to talk about a single topic is you're basically saying, only ever tell me good stuff about this industry, including find the good things about it when it's cratering, right? So you have MJ here, and from the peak of this year, let me just get my cursor over here. From the peak of this year, MJ is down 55%. Now it's actually just broken below, well, it IPO'd or it started over here. It's actually at a new lifetime low. And during this drop right here, no pot stock newsletter said, hey guys, you know what? Just don't touch pot stocks right now. They're going through an amazing, huge, crazy correction. We're going to lose a lot of money. But that's not what happens, right? Because when someone buys a newsletter to hear about the most amazing pot stocks coming out, you have an agreement that all they're going to do is talk about amazing pot stocks that are coming out, even if the industry itself is cratering. And you may have the best pot stock, but if the entire pot stock sector gets cut by 50, 60, 70, 80, 90%, it can happen to these teeny tiny sub sectors. Guess what? If the entire sector falls 90% and your amazing, most blue chip quality pot stock may only fall 85%. And so I find it dangerous to, go into these one type, well, I don't really like pick of the month newsletters anyway, but it especially gets dangerous and expensive when you go into these super, super tightly focused sectors. So the first thing I wanted to show you is just pot is going through a really come to Jesus moment. Probably not going away. More and more states are legalizing it. So it's here to stay. But whether you make money off it or not is something else. And this is, the big difference between what's actually going on and what you're getting kind of sold to believe. What's the story? And I'm sure the story is, don't worry, it's a small correction. But it's a big difference between understanding and being trained to, think in pictures or to, follow a good story. Okay, the next one I want to show you is what I'm going to call the People's Republic of China. So, don't know if you know this, but there's the Republic of China, which is known as Taiwan, and then there's the People's Republic of China, which is known as China. Now, this is the Hong Kong Hang Seng Index. This is actually the index. It's not a tracking symbol, so this is in local currency. And to me, what's interesting is right here, March 31st, and then again in April, protests started in Hong Kong. And since protests have started, the Hong Kong Stock Exchange is down 12.65%. So if you want to tell who's winning in the Hong Kong versus Beijing, you follow this price chart, right? Because if this continues to fall, and really if it breaks this August, right, this August low right here, because if it breaks this August low, there's only a couple more things to really catch it until it can really start falling. And I had someone say, aren't you worried about China taking over the world? And literally the first thing that hit my brain was, you mean like when Britain took over the world and then they had to like manage all those 50 countries and that didn't go too well? China's having to really, how do we handle Hong Kong? Because Hong Kong is under what's called a two-party system until 2047. And so this is the chart to watch. Now, on top of it, China's got this trade war thingy going on too. And I don't know if you've ever been to China, but I'm pretty sure they invented business. And when I went there for the first time in 1990, I was shocked and amazed at how entrepreneurial China was in 1990. And so Chinese business people, they've already been opening up factories in other countries to not have to get hurt again during the next trade war, because probably there won't be a trade war with Laos, or as most of us know it as Laos, or Vietnam, right? But with China, there will be. So there is definitely a battle going on for the People's Republic of China. They got Hong Kong on one side. Not that these are their only problems, right? And then at least on the other side, they got the Trump thing going on with the trade wars and the tweets. And they are struggling. And I say that from a stock market point of view. They are down greatly since the trade war started. And so I don't worry about a country who wants to take over the world. They have their hands full. And then the last price chart I want to show you, I'm going to call this Powell. Now, it's maybe an odd price chart for me to show, but this is the German 10-year Treasury yield. And let me get my crosshairs right there. So that gray horizontal line is where Germany will pay you 0% a year for 10 years if you give them your money. Now, back in August, September down here, they were willing to take 70 basis points, almost 0.75% a year, right? So basically what was going on is, oh, please, Germany, take my money and I'll pay you to hold my money. So people right now are paying Germany to hold their money, which is pretty interesting, right? And the reason I call this Powell is because I'm not sure that Jerome Powell can raise rates when Germany, at least from a yield point of view, is kind of imploding. And remember, this is Germany. This is not Argentina or Venezuela, right? You're looking at U.S. #1 economy in size, 2 China, 3 Japan, 4 Germany. Germany's the largest engine of Europe. Europe's the largest economic bloc on the planet. So this is a pretty major player that, even with the correction, is still willing to only take 35 or a third of a percent from you each year for the pleasure of them holding your money for you. So if this can't go any higher, and I don't know how much higher it can go. This is, I believe, more of a correction, because if you look how far the yield, and I mean, that is incredible, right? 60 basis points to -70, right? I mean, it's 1.3%, right? Or 130 basis points. But the fact that it just went right through zero, it little jiggle and then went back down. I don't believe Powell can raise rates if the German yield doesn't get above zero. I don't think he has room for that. And I think he's looking at German yields, and I think he's looking at the S&P 500. So what's the takeaway? What can you learn from this? Well, one thing, the market actually whispers to you, right? But when you have the boom box on, or when you have the TV on, I take singing lessons, and I love my singing teacher. She is so amazing. But when I go over there, their TV is on. I think it's on Fox Business News. And every once in a while, she'll say how stressed out she is. And I'll say, you can just turn the TV off. but she doesn't. Guys, you can just turn the noise off. And you can get trained to do that. But the big thing is just to notice that things can go much farther, right? And maybe this is the takeaway. Pot stocks can fall much farther, right? Uranium stocks fell 80, 90% after Fukushima. Pot stocks could do that too. I'm not saying they will. I'm simply saying price can move much farther than you can ever expect it to. And that's both to the upside and the downside. And one of those first principles is you got to go with what's happening. You don't have to believe it to be true, but to fight it is expensive. Thanks, guys, for being in my world. This is just another step in helping you protect your portfolio and your future. I appreciate you guys tuning in. Until next time, this is RC Peck. All right, take care.